Welcome back. I'm Pratap here. Today is the 14th December 2023. Let me say congratulations to each and everyone. The reason is we have completed the first 100 high liquidity zone execution because we've been monitoring for the last 2.5 months starting from 1st October 2023. Now we have completed almost 2.5 months, and today the 100 high liquidity zone is executed. That means we got the exact statistics today. How many high liquidity zones are got the success and how many high liquidity zones are failed. So let me show you the statistics. Out of these first 100 high liquidity trades, we got a success of 94 trades. That means the success rate is 94%. This 94 includes 4 invalid trades. Actually, those trades are successful, but we did not consider due to other reasons like risk related factors, even though they are success. But here we are verifying the power of the high liquidity demand zones and high liquidity supply zones. And only 6 trades are failed. Failed means stopped out. They hit the stop loss. And all these days I've been telling the average return on the investment for one future lot is 6.1%. So today, after completing the 100 trades, I took the average of all the 100 trades and the value is 6.18%. The ROI is 6.18%. So that means consistently our average return on the investment is maintaining. Okay, for those who did not know about high liquidity zones, and even for revising for the existing members who has been using high liquidity zones for the last 2 months, let me give you all the steps once again so that any doubts are there in your mind that will be clarified today. Let me explain all the steps step by step. Look into this. Look into the first point. The daily high liquidity zone should be used as a HTF zone. It need not be daily. It can be any time frame high liquidity zone should be used as a HTF zone. So what is this high liquidity zone? This high liquidity zone can be a demand zone or supply zone that is identified by the NeoStock software in such a way that zone is having higher success rate. By using special algorithms, by analyzing the zones starting from the year 1994 till the date, and it identifies some zones as special zones, and those zones are having higher success rate. So I have developed this algorithm with an objective, at least 80% success rate should be there. That means for every 100 high liquidity zones executed, at least 80 zones, 80 trades should be successful. Okay, what is the difference between high liquidity zone and high liquidity trade? By using high liquidity zones, we developed a trading strategy, and that strategy is called as high liquidity trade. Zone is identified by the high liquidity zone is identified by the NeoStock software. By using that zone, we have to plan our trade. And whatever the trade we are planning, that is high liquidity trade. And we need to follow certain steps for the trade. And those steps we are discussing now. The first step is whatever the high liquidity zone identified by the NeoStock software should be used as higher time frame zone, HTF zone. That is what I mentioned in this first point. Okay, whatever the NeoStock software identified, we are treating that as a HTF zone. That means in the HTF zone, we won't take the trades. Where we take the trade, we will fine tune that HTF zone to lower time frame zone, and then we will take the trade. How to fine tune? That is the procedure I am explaining now. And another important point, the second point is we do not give importance to trend and location when we are dealing with high liquidity zones. Because the high liquidity zones will work in favor of the trend or they work even against the trend. And also high liquidity zone work in favor of the location or also they work against to the location. Location means curve. The curve is not supporting, still high liquidity zone will work. That is the reason why we do not give much importance to trend and location. Because we know that high liquidity zone always works irrespective of the trend and location. Location means curve. That is high on the curve, low on the curve, equilibrium. All these, in any of these curve, the zones will work. That means demand zone in high on the curve, it will work. Supply zone in low on the curve also will work. Similarly, demand zone at downtrend will work. Supply zone at uptrend also will work. That is the reason why most of the time we do not give much importance. Because all these trades, whatever we discussed, we just looked into the trend and curve, but we never bothered about them. Whatever it is, our zones worked. And the third point is how to trade by using high liquidity zone. The procedure, after you identify the daily high liquidity zone, inside the daily high liquidity zone, we need to find a fresh 75-minute zone. If it is a high liquidity demand zone, daily demand zone, inside you have to find a 75 minutes demand zone, which should be a fresh zone. Similarly, if the daily high liquidity zone is a supply zone, inside the daily high liquidity zone, you should find a 75-minute supply zone, a fresh 75-minute supply zone. So this is the way we will fine tune. Why we are doing like this? To minimize the risk. That means to find the better place for our trading. That way you get better risk reward. That way we get the best profits. Okay, what is the next step? Again inside this 75-minute zone, we have to find a fresh 15-minute zone. Look into the fourth point. Find fresh 15-minute zone inside the 75 minutes high liquidity zone. Can we take the trade in this 15-minute zone? Yes, you can take if the risk is within your limit. Suppose the risk is not supporting, what do you have to do? Again you have to go to the next step. That is fifth step. What is the fifth step? If necessary, find fresh 5-minute zone inside the 15-minute zone to minimize the risk. The moment you minimize the risk, you also get the best reward. Majority of our stocks we planned at the 5-minute zone. Out of these 100 trades, majority of the trades are at the 5 minutes only. But few trades we took at 15 minutes time frame because the risk management is supporting us. Because if the risk management is supporting within 15-minute zone, don't go for 5-minute zone. Because 15 minutes is within the risk management. Again, if you further fine tune to 5 minutes level, there might be higher chances of missing the trade. And during our today's trade analysis discussion, I will show you one example related to this point. And what is the sixth point, an important point, our target? Take the trade at 15 or 5-minute zone, and then our target should be the opposing side 15-minute zone during the intraday itself. Most of the people, what they do during the intraday, they look for 5 minutes targets, 5-minute zone targets. But we are taking our target at 15-minute zone. The reason is high liquidity zones are having the capacity to push the prices until the opposing side 15-minute zone. That means we are getting more profits during the intraday. Generally, we aim for 15 minutes target for short-term trading. Like in 3 days or 4 days, we look for these targets. So such kind of targets we are getting during intraday itself. That is why our return on the investment is, ROI is 6.1%. Generally, during the intraday, around 2% ROI is acceptable. That is an excellent trade, getting 2% ROI during the intraday. But our high liquidity zones are not intraday trades. They are short-term trades. But getting the return during intraday itself. That is one major advantage of high liquidity zones. You should not forget the short-term trade returns we are getting during intraday itself. That means the return you are expecting in next 2 to 3 days that you are getting during intraday itself. This is one major advantage of high liquidity zones. That's why majority of our trades, our average return on the investment is 6.1%. And we are following these steps all these days. Because I have documented all these steps, so you can note down these steps later. You can pause the video and you can note down. This is the way I've been fine-tuning the zones all these days for the last 100 trades. This is the way we've been fine-tuned the zones. If you look into all the old, all the videos for the last 2.5 months, this is what we've been doing for high liquidity zones. And the NeoStock software identifies 6 different types of high liquidity zones. And you can find the list of those 6 zones in our playlist, NeoStock terminology. There is a special video, high liquidity zones. And I will give that video link in this YouTube video description, so that you can able to access that video as well. There I have mentioned all that 6 types. But out of these 6, we are using only first 3. And remaining 3 are having low priority. They have better priority in some special scenarios. Most probably you people are not aware of those concepts. That's why I'm not getting into those zones. Their trade plan and their trade setup is completely different compared to the normal way how we trade. So that is the reason why the best thing is always we are focusing only 3 types of zones. One is C underscore demand zone or supply zone. The second one is TCP underscore demand zone or supply zone. And the third one is support demand zone and resistance supply zone. That is S underscore DZ and R underscore SZ. And these 3 types we have given more importance. And especially on daily time frame and 75 minutes time frame, for high liquidity zones, we are giving most importance to S underscore DZ and R underscore SZ. That means our support demand zone and resistance supply zone, we are giving highest priority. Next to that, for the remaining zones, we are giving the priority. So this is this is about the high liquidity strategy we've been following for the last 2.5 months. And these zones, these high liquidity zones has given success because we have in everyday record, in every video recording session, I've been explaining the high liquidity zones identified in the previous day. Because today's trading session, the previous zone should be used. That means today, whatever the zones I am generating, high liquidity zones, they should be used in tomorrow's trading session. And whatever the zones I identified in tomorrow's trading, after the trading, whatever the video I am recording, in that video, I am doing post-mortem analysis. How many zones got the trades? And out of these trades, how many are successful or how many are failed? Most of the days we always see success only because failure we have seen very rarely. For the last 2.5 months, we have seen only 6 failures. That means only 6 zones are stopped out. And all these zones are there in the previous recorded videos. And also every day, those zones I am also documenting in an Excel sheet for the quick reference purpose. This is starting from 3rd October because 1st October and 2nd October are holidays. So starting from 3rd October, whatever the zones executed, those zones, the zones that are not executed, just we are leaving that. Executed zones, executed means either they are successful trade or they are failed trades during the intraday. So each zone, how much profit they have given and what is the return on the investment. We've been documenting for all these trades. On which YouTube video we have identified the zone. Because every day, in the end of the day, in the YouTube video, we are generating the demand and supply zones with the help of NeoStock software. That is stocks near demand zone and stocks near supply zone. And those stocks we have 2 types of zones. One is high liquidity zones and another one is normal zones. I am just ignoring the normal zones, focusing only on the high liquidity zones. Because I know the high liquidity zones are having higher success rate. Because I developed the software, I know they work. But you people are not aware of the software how I developed. Definitely you might be having some trust issues in the initial stage. And how you believe? Only by seeing the data. So that is what this data is. Excel sheet is having this data. All these YouTube videos, we have these zones identified. And the next day we've been discussing whether the zone is executed or the zone is not executed. If the zone is executed, is it a successful trade or is it a failed trade? That is also we are monitoring. And the failed trades I have specified with, marked with this red color. Probably this value also I should have been given with red color. So this is the first failed trade. So negative ROI, that is 1.5 negative ROI. That means we get a loss of 3,244 rupees. That is our stop loss. And this is the second one. And these are all successful trades, but we are not considering them. I said a few trades are invalid trades. How many? 4 trades, I guess. So we have 4 invalid trades, even though they are successful. That means they gave the return. They reached their target. Still, we are not considering it due to some factors like risk is very high. Some of such kind of factors. In the second failed trade, we got a loss 2,200 rupees. The negative ROE is 2.15%. And the third trade, the failed trade, we got 1,094 rupees loss, which is just less than 1%, a little less than 1% negative ROI. And the next one, we got a loss 2,030 rupees, which is around 1% negative ROI. And the next one 2250 rupees, that is 1.79% ROI. And the last one is 875 rupees, which is 0.7% ROI. So except these six, remaining all are successful trades. And when the trade is successful, most of the time, see how much profit we are getting. 11,000, 14,000, 16,000, 13,000, 5,000, 14,000, 8,800, 15,800, 7,000, 6,000, 4,000, 8,000, 8,000, 20,000, 7,000, 6,000, 14,000. All these are all intraday returns. Why we are getting more returns during the intraday? The reason is a high liquidity zone is having the capability to give maximum return, short-term return during intraday itself. Generally, what happens in the short term? Why we need to wait for some around 3 to 5 days? Because next day market again will go up, and the next day market again will go down, and one more day it will go down, again it will go up. That way you get profit. Due to the swings, we are avoiding those swings. And what is the advantage we are getting? Next day again we are getting trade in another high liquidity zone. Majority of the days, say for example, we have around 22 trading days or 21 or 22 trading days during the month. Out of these 21, at least 18 trades or 17 trades, 17 days, not 17 trades, sorry, at least 17 days or 18 days, we are able to find trades. Out of these 17 days, majority of the days, we are getting successful trades. Maybe you may see, maybe once in a while, rarely, you may see a stopped out trades. Maybe that day, same day, one trade is stopped out, maybe we might have got another 2 successful trades. So this is the way we got a huge profit. Anyway, I will be sharing this Excel sheet at our Telegram group. You can find it after this session, so that you can evaluate all these trades, because every trade is there. Here this column is talking about our YouTube video. The day we published the YouTube video having the report. And this one is the next day that this trade, whatever the trade we identified on this day, next day is it successful or not? I mean, is it executed or not? Not successful, is it executed? If it is executed, I am mentioning. Trades not executed, I am just leaving them. Because we are interested only on the executed trades. Okay, executed trades again, it is successful or failure. If it is successful, I am specifying it is successful with the profit. If it is failed, the negative value indicates we got a loss. So this is what you should understand. So after this video, probably you can refer the Telegram channel. There you can find this Excel sheet. And these are all the statistics what we have discussed. Now what we do? Let us look into the high liquidity zones we have published in our yesterday's report. Even before that, if you are attending, if any of you are attending this video first time, that means if you are visited our channel first time, please understand we are also providing free training on supply demand zone price action. You can visit our NeoStock home page. You can click on this home page and scroll down to the playlist supply demand zone price action course. Just click on this playlist. You will be able to identify all the videos, training videos, starting from lesson 1.1 until the most recent lesson. Even the upcoming lessons also will be placed under this playlist. I am also providing the link to this playlist in this video description. From there also you can click on the link and directly you can get into this playlist. And these videos are helpful to the people who wants to learn demand and supply zone. Even these videos are helpful to the people, even if you are having 4 to 5 years of experience in supply and demand zone. Starting from the first video, definitely every video, you will be seeing few new points. At least 5 to 10% new points you will be seeing in every lesson. Even this candle, OHLC candles, looks like a basic lesson. Even in this lesson, you will find, definitely you will find 2 to 3 new points which you haven't learned earlier. That's why the people who already learned the demand and supply zone course, they are also again repeating all these lessons. Okay, this is about our free training program we are providing. Now let us get into our analysis part. Let us do a quick analysis today. And the Nifty, again, it looks like a demand zone is created, a new demand zone on daily time frame. This is a daily demand zone, DDZ. Why? Because we have a leg candle. This is the leg in, a drop candle. And then we have a base candle. After that, we have a hidden body here. That means this is a hidden zone. We already learned hidden zones are having higher success rate. Because if you add the hidden body, because there is a gap, add the hidden body, then it looks like a big leg candle. So it is a leg out candle. Okay, now let us look into our trades. And AU Bank, this was already tested earlier, prices went deep, and after that I didn't find any fresh 75-minute zone inside this. So what you can do, you can ignore this stock anyway. Prices did not enter into this zone. Also, we didn't fine tune any zone. Nothing is available inside the 75-minute zone. So you can ignore it as it is. And next one is Biocon. Biocon, we have fine tuned this daily demand zone. Inside we have fine tuned to 75-minute zone. So inside daily zone, we identified a candle. This is a ERC candle. After that, we have 4 base candles, and then we have a drop candle. That way, we identified the 75-minute zone. Again, inside 75-minute zone, what I did, I went to the 15 minutes. In the 15 minutes, yeah, this is the 15 minutes time frame. We have identified one 15-minute zone inside this entire area, because this is not clear here. So what I did, I went to the 5 minutes. There I identified 2 5-minute zones. So this is the first 5 minutes drop, base, drop. And see the next zone, how it looks like. All these are all base candles. When you have so many base candles, what happened to the zone? The zone will be violated easily. But now look into the structure. Now if you consider this is a leg out, base and drop. But if you consider this is a base candle, all these are all base candles, and then this zone will be violated. But what I did, for me, this is a valid leg candle, a medium size leg candle. So consider as a leg in, then we have a base, and then we have a drop. See now how the structure looks like, all these are all base candles. The moment you hide this large candle, see, all of a sudden how the structure is changed. That's why visual representation is very dangerous in trading view. You should be very careful. Suppose if this is looking like this is having a range, a higher range. If you want to consider this green color candle as a leg, remaining all are small size. Still you have 1, 2, 3, 4, 5 base candles are there. But look into compare this candle range and the other candles ranges. And also compare this body. At least this is having a 50% above body, above 50%. That way we can give a preference to this candle as a leg candle. See, it is all based on your experience, how we are getting convinced with this candle structure. That is very, very important. The moment you get better and better experience, you know what you do? Sometimes some of the candles you give relaxation. They may look like a leg candle, but you will consider that as a base candle. Some of the candles looks like a base candle, but you might be having some doubts in our mind. But once your experience grows, you give a priority to this candle as a leg candle. So that way we have drawn this zone. But see how all these candles looks like. They didn't have any clarity. Why? Because there is a very large candle is there. Because of this large candle, this entire visual representation is changed. So that's why you should be very careful when you have such kind of candles. Just hide them. The moment you hide, you get a better structure on this chart. So this is a biocon, how I fine-tuned. Just why I'm showing you this, because we discussed a high liquidity strategy. So whatever we discussed, the steps, same steps I'm following here. See what I did? I consider daily HLQ zone as a HTF zone. So this entire daily zone is a HTF zone. After that, what I did, I went inside the daily zone by changing the time frame to 75 minutes. See here, I changed the time frame to 75 minutes, and there I identified we have a leg-in candle, ERC candle. After that, 1, 2, 3, 4 base candles, and then we have a drop. That way we drawn this 75-minute zone. After that, what I did, again, I find a fresh 15-minute zone inside the 75-minute zone. So I changed the time frame to 15 minutes. Because the 15-minute structure is not very clear, so what I did, again I went, find fresh 5-minute zone inside this 15-minute zone. So whatever the marked 15 minutes, roughly I have marked the 15 minutes area, there I found 2 5-minute zones. So what happens next time when prices enter into the zone, we will take a trade. But today prices didn't reach into that particular zone in biocon. But how I am planning the trades by using high liquidity zones, I have explained here. Same thing we are doing for all the stocks. No difference at all. Next, Canara Bank, financials, home finance. See, this is a high liquidity zone. Drop, 2 base candles and drop. So inside we identified a $75. See, we have a drop, 2 base candles and a drop. We identified. That means we have to take a trade only once prices enters into this zone. Okay, because the risk is very high in 75 minutes, what we do? Again we go to 15 minutes time frame. And inside that 15 minutes time frame, we will plan the trade. But how these candle structures are looking? All these are all small candles. 1, 2, 3, 4, 5, 6, 7, even this one 8. Because inside the 75 minutes we have so many base candles, there are higher chances of this zone will fail. That's why we want to avoid such kind of zones. That way we saved ourselves from many stopped out orders. Today, almost at the end of the day, prices entered into this zone. End of the day, almost at what time? At 2 o'clock. That means in next 1 hour 15 minutes or 1.5 hour, the trading session will be completed. Mostly at 2 o'clock, we don't plan. After 2 o'clock, we don't plan in new intraday trades. What people will do by 2 o'clock, most probably, whatever they brought here, they will book the profits. Maybe that is the reason why small rejection has given. But otherwise, it is giving a feeling that this zone is working. But if this zone is working, prices should go down up to the next 15 minutes zone. That is our target. This is supposed to be our target. Let me draw the. This is supposed to be our target. A 15 minutes target. But is prices reached here? No. Why? Because this zone is not having the power to push the price down. Because 1 hour is enough for this high liquidity zone to push the prices down. But see the structure of the candles. That means there is no enough liquidity, even though software identified at the daily level. But the moment we went inside the 15 minutes level, we are really finding, really we have a reasonable liquidity is there or not. If the candle structure is weak, most probably those zones will fail. If more and more base candles are there, what does it mean? Existing liquidity already they consumed. Base candles always consumes the liquidity. Because there is a fight between buyers and sellers. The base candle indicates equal demand and supply. That's why more and more base candle indicates a lot of liquidity is consumed in that area. That means the less pending orders will be there. That is the reason why such kind of zones will be violated. Maybe tomorrow this zone will be violated easily during morning hour itself. Unless institutions create a new supply again here inside this. That is the only possibility. This zone may not fail. But otherwise, most of the time, this zone will be easily. This entire daily zone I am talking about. Not only this 75 minutes. Entire daily zone will be violated. That is the reason why even yesterday also we discussed this stock. I told you, don't take trade in this zone. And the next one is Dalmia Bharat. This is our 100th trade today. High liquidity trade. First, let me show you in the daily time frame. This is today's candle. So it looks like this high liquidity zone. What we fine-tuned inside daily, we fine-tuned 75 minutes. This 75 minutes is violated, right? It looks like our trade is failed, but that is not the case. Go to lower time frames, you will understand. We got a successful trade. After that, next time again, prices reached there and the zone is failed. That is a different story. See here in the 75 minutes time frame, I identified a fresh zone. The 75 minute zone. Inside we identified again a fresh 5 minute zone, 15 minutes. That 15 minutes fine-tuned to 5 minutes level. See today morning, and this one we already discussed yesterday in yesterday's video. And today prices reached this zone. See here in this candle, prices reached this 75 minutes candle. That means within the first 75 minutes, trade is finished. And you get better clarity how we finished the trade if you go one more time frame below. See here in this candle, the first 9:15 candle, 15 minutes candle, prices entered and see the rejection from here. That is the power of this zone. But already in this candle, prices reached deep inside, somewhere up to the middle of this particular zone, prices reached. That means majority of the liquidity is consumed here. And after that, there is no more demand. Demand is weakened, and see immediately the remaining pending order pushed the price down. And after that, in next two candles, that is by 9:45 candle, it reached the target. And that way we got 7,937 rupees profit for Dalmia Bharat, and which is 6.96% return on the investment per one future lot. Because always we are calculating ROI based on one future slot. And after that, again, this demand zone, what it has done, it again pushed the prices up. And this time, because by this time already majority of this pending orders are consumed, and next time easily this candle pushed the price up. If you look into 5 minutes candles, you get even better clarity. Prices went, and existing some of these pending orders again tried to push down, but demand is very strong in the next candle, violated this zone. But anyway, we already got a zone here. Most of the times when prices during intraday, if the prices are reaching second time, again we will try to take an opportunity. But this stock we will avoid because already prices went a little at least in the middle of this zone, the prices went. When we go for second trade, just before the zone, if prices reached and then turn back. But here see the candle, the wick, it went a little deep inside. In such kind of situations, we avoid the second trade. So we got a successful trade with a profit 7,937, that is close to 8,000. And ROI is 6.96%, that is close to 7%. And the next one is GMR Infra. GMR Infra, we didn't plan any trade. The reason is NeoStock software identified this zone from the year 2008. The supply zone is from the year 2008. And 2008 data is not available in TradingView. So that is the reason why not in a position to plan this trade. Just above there is a supply zone, but TradingView data is not there to mark the to mark the zones. So no trade planned for GMR Infra. And next one is Sriram Finance. Sriram Finance, we have identified we have a leg-in candle and then base candles, and then we have drop candle. But see, the zone is easily violated. You might get a doubt. That means our zone is failed. We got a stop loss hit. But really, stop loss hit or not, we will determine based on our knowledge. Otherwise, we don't take this as a stop loss hit. If we know a zone fail in advance, we never take a trade in that. When a zone will fail, I already explained. In case if you missed yesterday's video, please listen yesterday's video. All the scenarios or majority of the scenarios, when a zone fail, we discussed in yesterday's session. Because we got live examples yesterday in the market for almost all the scenarios when a zone fail. And this scenario we discussed yesterday, similar scenario. See this, we have a leg candle and then 3 base candles and then we have a drop candle. This is looking like an excellent zone. Drop, base, drop. But you understand the real, the real structure, the price structure only if you go a time frame below. So go to 15 minutes time frame. See the candle structure. We have base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We have a leg candle and 13 base candles, 15 minutes base candles. And drop. What will happen to this zone? Any zone having more than 6 base candles will be violated easily. That is what happened. Just one candle and next candle together, the entire zone is broken. And here it has given a small rejection. Do you know why it is given a small rejection? The rejection is because the retail traders like us, whoever is trading by using 75-minute zones, some people trade only on 75-minute zones. They would have placed their orders here in this zone because they would have placed orders at the type 2 proximal entry. This is the type 2 proximal entry. Now go down. Go down means go a time frame below, that is 15 minutes. See the rejection from this zone, how it came. Exactly type 2 proximal entry, a small rejection came. This rejection is because of the domestic investors like us, the demand and supply zone traders like us, because we don't know when we zone, because many of the people, many of supply demand zone traders doesn't know when a zone fail. Whatever the concept I thought when a zone fail, majority of the people are not aware of that concept. That's why what they do blindly, they keep their orders here on the 75-minute zone. And because all these orders are there, definitely some price will be down, but it's a very minimal level. But institutions' demand is very strong. What happened? They consumed all these orders. Whatever short orders they placed, and because institutions' demand is very strong today, and their buy orders consumed this entire supply, and after that easily this zone is violated. That means all these 75 minutes demand and supply zone traders, they got a stopped out. But we already know this zone is going to be stopped out. Because we know we never plan a trade on this zone. And many high liquidity zones which we identified they are going to violated, we never planned a trade on those zones. When we plan a trade, until 5 minutes time frame, if the structure is proper, that's why price structures are very, very important. Price structures is a new concept in supply and demand zones. And I've been focusing on this concept. Why? The price structures only helping us. And when you will be able to identify these price structures only if you do top-down analysis. At least from high liquidity zone as a higher time frame, from there you start your analysis, go until 5 minutes level. Then you will be in a position to tell the zone is going to work or it is going to fail. When we filtered all these scenarios and then only we planned the trades, those trades are today 100 trades completed. Out of those trades, a zone having good structure, the zone having good structure inside the high liquidity zones. Only such kind of zones, only 6 zones are failed out of 100. That is what you have to understand. Hope you got the clarity why we are looking for the structures, price structures within the zones. That is at inside 75 minutes. What is the structure? How you know inside 75 minutes? If you go to 15 minutes, you will understand. Again 15 minutes, what is the price structure? How do you know? Inside 15 minutes, again if you go to 5 minutes, you will understand the structure. So till 5 minutes level, if the structure, price structure is there in a proper way, definitely we can confirm there the liquidity is good. That way we are getting successful trades inside the high liquidity zones. That means we are finding the real origin where the actual order flow is there, we are finding by using this technique. Which technique? This is the one, high liquidity trade. High liquidity trade is a strategy. High liquidity zone is a higher time frame zone identified by NeoStock software. Inside zone, we are planning a trade. That trade is a strategy. What is the strategy? The strategy is all these 7 rules. And I've been following all these 7 rules all these days and identifying the trades. That way I identified 100 trades by today for the last 2.5 months time period. Okay, the next stock is Sun TV. Sun TV is a supply, high liquidity, daily supply zone. We have a drop, base, drop. See, already tested once. This 75 minutes, we have fine tuned a 75 inside. And this 75 is tested once. Again, same 75 minutes is tested second time. When it is tested second time? On last Friday. See the rejection the moment it went from here. The reason why I have drawn this blue color is just to find there are any zones above this blue color, fresh zones. That is fresh 15-minute zone. I didn't find any fresh 15-minute zone, so I left this stock. So I'm believing this zone probably it will be violated soon. Because after that there are no more fresh 75-minute zones inside this. So let us leave Sun TV. And what about today prices? Last hour probably. At 1 o'clock, near to this zone prices reached, but it didn't go inside the 75 minutes. And next one is Axis Bank. This is a 75 minutes demand zone. We have a 75 minutes demand zone, and it is also having a 75 minutes supply zone is also there. But see, the supply zone is very large supply zone. Today prices went into the 75 minute supply zone and gave a very good return from here. But we didn't plan the trade inside because this is the one I fine-tuned at the 5 minutes level. The reason why I didn't plan, see the risk. Risk is high and reward is less compared to the risk. See, it reached the 15 minutes target somewhere here. But look into the risk and look into the reward. The reward is smaller than the risk. You cannot plan such kind of trades when you have a high risk. Maximum acceptable risk is up to 2% on your capital. So what is our capital? Our capital is one futures margin cost. So you cannot plan more than 2% risk on your margin. But if you calculate this risk, it is something around some 5% or 6% cost. So if the trade is against you, you get 6% loss on your capital, which is not at all acceptable. That's why, as per the risk management, completely rejected this trade. So that's why I'm not considering anything from this stock. And next one is Balram Chini. And this is another successful trade today. Balram Chini is moving between high liquidity 75 minutes supply zone and 75 minutes demand zone. Actually, this 75 minutes high liquidity demand zone is there inside high liquidity daily zone. Daily is high liquidity zone. Even 75 minutes is a high liquidity zone. Inside this 75 minutes, we have a 5-minute zone. That 5-minute zone is also a high liquidity zone. It's a typical scenario. Having almost all the zones inside the daily is high liquidity zones. And today we got a trade here in high liquidity supply zone. Demand zone prices didn't reach into this 5 minutes level. Okay, now let us get into 15 minutes to find the target. See, this is a 15 minutes zone at type 2 proximal entry. It is not only 15 minutes, even 5 minutes is also the same is the zone. The moment I went to the 5 minutes, 5 minutes also it is same. We have drop, 3 base candles and drop. Okay, sorry, it's not 5 minutes is not the same because the 5 minutes it is even giving more risk. That's why what I did, I fine tuned to 15 minutes proximal type. This is a 15 minutes trade but fine tuned to proximal, and this risk is less than 5 minutes risk. So price entered, but what is the target? Our target should be somewhere here. But has it reached the target? No, it failed to reach the target today. But how to exit? So it has provided multiple opportunities today to exit. Let us go to 5 minutes, you will get clarity about these candles. See, candles are not moving from this blue color line what I have drawn. How many 5 minutes candles? Starting from 1 o'clock 10 minutes, see until 2 o'clock 15 minutes. More than an hour, the prices were moving within this area. That means there is a very strong order flow. Which order flow? The demand, the strong buy order flow, and it is not letting the prices go down. In such kind of situation, what you have to do? Near this, when prices are nearing to this blue color area, you need to exit. We have seen this strategy previously also. See, generally, how much time we wait? Maybe some 15 minutes or half an hour maximum you can wait. If beyond that, still prices are moving around that, that is an indication that there is a strong order flow. Probably the supply will be weakened and this strong order flow will push the prices up. See, end of the day, after 2:30, how prices went up. By the time the entire supply is consumed. And this is the place we need to exit. So at least one of these candles at 2 o'clock, because this is at 1 o'clock. Since 1 o'clock till 2 o'clock you've been waiting. So definitely you have to take a decision to exit. Whatever the profit you got, you have to satisfy with that. And that way, Balram Chini has given 10,880 rupees profit. That is from this 15 minutes type 2 proximal supply zone to this blue color line, whatever we have drawn, that is the area where strong order flow is there. There you need to exit. So this is our revised target. That's why always I say markets are dynamic. There are times we need to change our targets. This is another classic example. Yesterday also I have shown you one example. So 10,880 rupees, which is 4.65% ROI, because the margin cost is high. That's why ROI profit is good, 10,880, but return on the investment is only 4.65%. It is around close to 2.5 lakhs margin for one futures lost. 2 lakhs 30,000 something is there. But this is another successful trade from our yesterday's list. And next one is Navin Floor. And we didn't get an entry in this. because this is a 75-minute zone. So we didn't get. Actually, the previous one, the Balaram Chini, we have identified this stock in our yesterday's stock near to 75-minute zone, the stock near to 75-minute zone. But we got entry in 75-minute supply zone because we have the stock is having both zones are high liquidity zones. Look into our yesterday's report, you will understand. That's why I'm telling always whenever we have two zones, both demand and supply zones are high liquidity, one of these zones we get the opportunity. That is what I've been telling all these days. So this is another example. Actually, the stock is near the demand zone as per our yesterday's report. But we got entry at the supply zone. And the next one is Obrai. This is also we didn't get entry today. Prices did not reach into this zone. The next one is Britannia. So this is a 75-minute zone. We have fine-tuned to 15-minute zone. We have a drop, two base candles, and a drop leg out. Leg out is not a great leg out, but we have a follow through candle is there. So that way this zone looks like a good zone. But this zone is not considered for the trading because look into the 5-minute structure inside the 15-minute zone. All these are all base candles. Base candle 1, 2, 3, 4, 5, 6, 7. Such kind of zones will be violated. That's why I don't want to take trade in this zone. But it looks like, see, morning 9:40, morning 9:15 candle. It reached the zone, the same candle, it even reached the target, 15 minutes target. So this is the 15 minutes target. It reached the target. But I have some doubts on this candle. The reason is look into 1-minute candle. Actually, 1 minute, everything happened. We got the trade and reached the target. Generally, it happens, sometimes some false trades will cause the issues. That's why I have some doubt, not considering at all, even though the candle is, this is a 1-minute candle. See the range of this candle. It's a very huge range. So a lot of doubts I'm having on this. See, after that, prices are here only. They didn't move up or they didn't move down. After that, slowly went down. See, after that, prices went, but definitely there could be some orders will be there by traders like us. That's why it pushed the price a little down, not more. You get clarity when we go to 15 minutes time frame. Generally, what should happen if the zone is good? Prices should go down up to our next 15 minutes target. This is our 15. We have a drop, two base candles, and a rally. At least this level it should go. It didn't happen. After that, the zone is violated easily. So anyway, we didn't consider this zone. And next one is Cummins. This is another successful trade we got. This is another 15-minute zone. This is the last one from our yesterday's list. So this is a drop, two base candles and a drop. So inside, identified a 15-minute zone. See here, you have a drop candle, two base candles, and then you have a drop. It's not a very great layout, but okay, we can consider. So if you draw a 15-minute zone, it will be like this. That way you got the trade. But the moment you fine tune to 5 minutes, let me show you the 5 minutes. The 5 minutes, it is a rally candle. We have 4 base candles, we have a drop. So we can draw a zone like this. So what is the low of this zone? 1982, 1982. Generally 1982, at least 1% of 1982. So we can say close to 2 rupees. Buffer generally, before this we will place our orders. Some people may give maybe 3 rupees until 3 rupees. And what is the price up to the high it reached today? 1979.50. That means 2.5 rupees just before this 15 minutes fine tuned zone. It failed to reach exactly into this zone. But most of the times what happens, we place our orders just 1 rupee or 2 rupees before. So those who placed 1 rupee or 2 rupees below this zone orders, your order would not have been executed. Minimum 2.5 rupees if you would have placed, your order would have been executed. But those who have taken trade at 15 minutes time frame, so how you have drawn your 15-minute zone? Like this. Your trade would have been executed. And this 15 minutes risk is also very minimal. It is less than 2% only, our risk level. That's why I'm telling, sometimes your 15 minutes risk is less than 5% level, sorry, less than 2% level. You plan your trades on 15 minute zone itself. You need not go for fine tuning at 5 minutes level. Sometimes your trades will be missed, like how this trade would have been missed if you are planning your trade on the 5 minutes. When you have to go to 5 minutes, if the risk is not supported, see here, the point I told you, if necessary only you have to find fresh 5-minute zone inside 15 minutes to minimize the risk. Sixth point, take your trade at 15 minutes or 5-minute zone. If you minimize your risk at 15 minutes, what is minimizing the risk? You have to bring your entry level less than 2% risk level. That is what the fine tuning, less than 2% of the risk on your capital. Your capital for future slot is the margin amount. If your margin amount is 2 lakhs rupees, say for example, your future lot value is 2 lakhs, say for example. What is 1%? 2000 rupees. So if your 15 minutes is within the 2 minutes gap, take your trade in the 15 minutes itself. You need not fine tune to 5 minutes. Sometimes 15 minute zones are, the depth is high. Maybe if you are calculating, you're comparing with your margin, future margin amount, maybe it could be 3% risk or 3.5% risk. At the time, what we do, we go inside 15 minutes and we will fine tune at 5 minutes area. These are all the different techniques to minimize the risk. Anyway, these concepts, if you are, though for those who are not aware of these concepts, the phase 2 training program, again in the risk management, I will be explaining all these concepts with the details. Probably by end of this month, you will be able to learn those concepts. So that way, if you would have got a trade here on the 15-minute zone and finally reached the target, and Cummins has given 13,350 rupees profit, which is a 12.87% return on the investment. But remember, this is a successful trade only if you are taking on the 15-minute zone. If you planned your trade on the 5-minute zone, maybe marginally you might have missed because the 2.5 rupees difference is there. Most of the time we take a trade with 2 rupees below this, maximum 2 rupees. With 50 paisa difference, you might have missed the trade. Okay, for our high liquidity zones point of whether you miss or I miss, it doesn't matter. For the high liquidity zone point of view, it is a successful trade. So this is the last stock from our yesterday's list, and remaining stocks I kept from yesterday's. I didn't delete them, so not looking into them. So this is about the trades from our previous report. So we got 3 successful trades today, and we avoided 2 failed zones today. We avoided because we know those zones are going to be failed. Now let us generate demand and supply zones. So entry time frame is daily. Now today I will be giving you only zones near demand and supply zones. I am not getting into the other things. Entry time frame is daily. Let us find the stocks near. So let me start with directly starting from yearly. In order we will get into all this after that. So let us start with yearly. Entry time frame is yearly. Let us find the stocks near yearly demand zone. Mostly there won't be any zone. Even yearly time frame. Supply zone also most probably it may not be there. Near yearly time frame, we don't have supply zones. And half yearly time frame, near demand zone, we have one stock listed. The same stock we've been seeing for the last few days. Similarly, supply zone also we have seen on half yearly time frame. Near half yearly supply zone, we have seen one stock UPL. Okay, now let's go back. Entry time frame is quarterly. Near quarterly demand zone, we have one stock identified. See, I'm quickly moving on to the previous slides. The reason is you need to pause the video. When you want to study any particular zone, please pause the video. And quarterly time frame, stocks near supply zone, we have one zone ABC Capital. Let's go back. And monthly time frame, stocks near demand zones, let us filter. We have only one zone. And for monthly time frame, stocks near supply zone, we have filtered 3 zones. Let's go back. Entry time frame is weekly. Stocks near weekly demand zone, we have filtered 3 stocks. Let's go back. For weekly time frame, stocks near weekly supply zone, we have filtered 6 stocks. Let's go back. Next, daily time frame, stocks near daily demand zone, we have filtered 5 stocks. So here we daily time frame, we look for high liquidity zones. One is Astral. That's it. Only one stock we identified. Let's go back. Entry time frame daily. Stocks near daily supply zone. We have filtered 10 stocks. So how many high liquidity zones are there? One is Apollo Hospital is a high liquidity supply zone. And Cholamandalam Finance is a high liquidity supply zone. CUB is a high liquidity supply zone. And IDEA is a high liquidity supply zone. National Aluminium is a high liquidity supply zone. And Wipro is a high liquidity supply zone. We have a good number of high liquidity supply zones. And Wipro, both demand and supply zones are high liquidity zones. So let's go back. Next one is entry time frame is 125 minutes. Let us find stocks near 125 minutes demand zone. We have identified 4 stocks. Let's go back. Entry time frame 125. Let's find stocks near 125 minutes supply zone. We have identified 8 stocks. So let's go back. Entry time frame is 75 minutes. Let us find stocks near 75 minutes demand zone. We have filtered 6 stocks. Any high liquidity demand zones here? Only one stock identified, India Mart. Okay, let's go back. 75 minutes time frame. Let us find stocks near 75 minutes supply zone. 12 stocks are filtered. And high liquidity supply zones, we have indices. Nifty FMCG, Nifty Media. Okay, when it comes to stocks, high liquidity supply zones, we have L&T Mindtree, LTIM. This is a high liquidity supply zone and it is also having high liquidity demand zone. Both are fresh zones. And next one is National Aluminium is there. This is also having both high liquidity demand and supply zones. And then we have Siemens is also high liquidity supply zone. Sun TV is there, but it is already pierced. We don't look into pierced stocks. Okay, this is about 75 minutes time frame. Next, 25 minutes time frame. Let us find stocks near 25 minutes demand zone. So 6 stocks are filtered. Let's go back. 25 minutes time frame. Let us find the stocks near 25 minutes supply zone. So these 9 stocks are filtered. Now let's go to the 15 minutes time frame. Stocks near 15 minutes demand zone. We have filtered 6 stocks. Let's go back. 15 minutes time frame. Let us filter the stocks near 15 minutes supply zone. 4 stocks are filtered. Let's go back. Next one is 5 minutes time frame. Let us filter stocks near 5 minutes demand zone. 6 stocks are filtered. Let's go back. 5 minutes time frame. Let us find stocks near 5 minutes supply zone. So total 9 stocks are filtered. So these are all the stocks near demand and supply zone, starting from yearly time frame till the 5 minutes time frame. So you can make use of these zones for our next trading day, that is tomorrow, from this list. Hope this information is useful to you. Let us all meet again in our next video. Thank you.